Andrew McLachlan, Senior VP Development Sub-Saharan Africa, Radisson Hotel Group, South Africa. Wessam Okasha, Senior Director Development, West Africa for Hilton International. And we'd like to apologize to Wessam because in the actual brochure, we have him down as working for another company, and he doesn't work. He works for Hilton International. So we apologize to you, Wessam, for that mistake. A round of applause for him. Resit Tolga Bagurohu, CEO, Ronson's Nigeria Construction Limited, and Abi Adisa, co-founder, CEO, Amara Suites, Nigeria. So this is the hotel construction and delivery in West Africa panel, a focus on supply, project delivery, and construction. Over to you again, Trevor.
Okay, thank you very much indeed for introducing the panel. I'm tempted to ask each of the panelists to tell you what they're all about, but I think they'll go on and on and on doing their adverts about their companies, so I'm not going to do that. I'm just going to explain who we've got here from my own point of view. Andrew McLachlan at the end, raise your hand. Andrew McLachlan, shame about the tie. Yeah, I know.
Casual Friday.
Doesn't wear a tie. Andrew McLachlan is responsible for expanding the footprint of the Radisson Hotel Group. Radisson Hotel Group is now Chinese-owned. Yeah, it's a big group owned by the Chinese and run out of Brussels, I think, effectively. Run out of Brussels, that's history. And he has five brands, there's another one. 5 brands that you're developing in Africa, and you have the opportunity to say what they are now. 5 brands.
Thank you. So from a Radisson Hotel Group point of view, we have 5 brands positioned from mid-scale through to luxury. Park Inn by Radisson is a 3-star brand, positioned full-service 3-star brand. Then we have Radisson, which is an entry-level 4-star brand. Then Red Radisson, which is a lifestyle brand positioned in the upscale segment of the markets. Then Radisson Blue, which is our most well-known brand, which is positioned as an upper upscale full-service brand. And then Radisson Collection, which is a brand positioned about 25% better than a Radisson Blue in the entry-level luxury segment of the markets.
Okay, thank you very much. And then next to him we have Wessam Okasha, who's doing much the same job. He's with Hilton, a relatively newbie in Hilton. When did you join Hilton?
I joined Hilton in June this year. In June this year.
June, wow. Okay, so 5-month-old baby with Hilton. And he's responsible primarily for West Africa, yeah?
Exactly.
Andrew, you're Africa as a whole. You're West Africa. Just very quickly, I know you've got hundreds of brands. Which brands are you focusing on signing deals for West Africa?
We mainly focusing on bringing 4 brands or sometimes 5 brands depending on the destination.
Make your mind up.
We're going into the Hilton Resort, the Curio collection by Hilton, which we opened here as well in the first Curio in Lagos, then DoubleTree, and eventually a Conrad.
Okay, thank you very much. And then we have my Turkish friend Tolga. I wonder what a Turkish man is doing on the stage here, but he doesn't know either. So, Tolga is the head of a Turkish construction company. In Turkish, it's Renaissance. Did I pronounce that right? In English, it's Renaissance. Okay, Renaissance. And you're going to tell us just briefly, what are you trying to do here?
Well, we're
in Nigeria. What's your plan?
Our plan is we are a turnkey contractor.
Yeah.
And we'd like to become in the first 2 contractors in 10 years' time.
So they want to build hotels. Okay. So we're making progress from the guys, from the deal junkies at the end there, who are signing deals, to somebody who wants to get them built, to see how we can put them together. And then Abi. Abi, you're from Amara, which is an operator of long stay apartments and suites. Your brands, what are you doing quickly?
So we're building an international African brand. So we're doing long stay service apartments. It's the one brand for now called Amara Suites, but we have a mid-tier brand that we're working on called Picket Suites as well.
Okay, good. Thank you very much. All right. Tolga, let's start with you. You want to build hotels. So, as a contractor, how do you get to build a hotel? Do you just sit back and wait for somebody to send you a tender document? Or can you actually be active out there to move these heaps of paper that these guys sign, to move them into bricks and mortar? What can a construction company do to get a hotel built? Not just building the thing, if you know what I understand what I mean.
Thanks, Trevor. I would say turnkey contractor, first of all. I think the key thing is a turnkey contractor's coordination between the client and the operator. It must be in harmony, and they must stick to their terms to actually get it through properly.
Do you initiate projects ever? I've seen some contractors who play developer because they see that if they to get a construction contract, they might actually have to create the project from get-go.
That's a good question. Actually, we have a development arm in Turkey and Russia, but we don't initially start developing projects. We initially start contracting and then go into investment and development.
Okay, sticking with you just for another question. No money, no project. Most of the money on the project is going into the contractor's pocket. Can you source finance?
We will facilitate finance. We will not be the basically financer, but we can source finance. That's correct. It depends on the product, location, basically very important, and the client itself, their credibility.
Okay, so that's a bit more than just sitting back waiting for a tender document to make it happen.
Correct.
Andrew, the management contracts you sign, in the past you've had an investment fund, whose name, Afrinord, which invested very successfully in some hotels to make it happen. What are you doing today as Radisson Hotel Group to go beyond the pieces of paper to get a hotel built as the management company who's primarily interested in opening and operating that hotel when it's built?
So from a Radisson Hotel point of view, over the last 10 years, we've obviously paid a lot of school fees across Africa. We have projects in 31 countries. And over the last 4 years, we've doubled the size of our portfolio because we've really focused on making sure when we sign the agreement, we actually have the correct professional team in place. So we pay a lot more attention on making sure that we appoint the right professional team, or the owner, with our assistance, is picking the best possible team. And today, we actually will not sign an agreement unless there actually is a design, build, turnkey contractor appointed. We've realized over time that to succeed in these markets, you need to make sure that you actually have a contractor that is able to do a full turnkey solution at a fixed price and a fixed time sort of contract. And if we actually don't have that type of contractor on board, we actually won't execute the agreement, because we've just learned over time that the chances of the hotel actually being built or opened on time, if we don't have the right team, is going to fundamentally affect the long-term investment for the owner. So for us, it's making sure that we design the hotel to the correct space, so we don't oversize the hotel, and we have the right team that we maybe spend a little bit longer planning, maybe spend a little bit more in professional fees in the planning stage before we actually start the project. We've seen that lenders that we use that are frequent sort of providing funding to hotels are getting a lot more comfortable with the fact that we actually wanting to have turnkey contractors, where we're actually passing the responsibility onto a big firm like Renaissance to actually take on that sort of responsibility.
Well, once upon a time, your predecessor company, Residor, used to lease hotels and provide, although we heard just now that leases are as rare as hen's teeth. You used to. You used to lease hotels, and leasing for an operator to lease a hotel, that becomes much more fundable. Some of the South African funds, some of the German funds will say, yep, we'll take that on because we've got a guarantee effectively of income. You don't do that anymore.
No, so we actually, in different parts of the world, we do. So we've moved away from an asset-light position as a company to an asset-right position. So in Western Europe, we've actually signed 12 leases this year. So we will sign leases in certain markets. My first 2 deals with Radisson in Africa were actually leases. I signed 2 leases in Sandton at the time.
In South Africa.
In South Africa. Both hotels never opened as leases though. Before the hotels were actually open, while they were under construction, the developer was able to actually sell the hotels, and the purchaser coming in realized that under a lease, when you were wanting to sell the hotel, he wasn't going to get the same yield. So he preferred to convert it to a management agreement where you could actually have a greater yield. We've seen the discussion on lease versus management. We've seen some large real estate companies actually opting to go the management agreement route now versus the lease, purely because the lease is only used to raise debt funding, but post that, if there's actually a downturn, that lease is only going to maybe cover you for a year and a half, where you're leaving so much on the table on the upside when the hotel performs. So they would rather go with a management agreement and take the risk that the upside is far greater than the downside.
Okay, thanks. Abby, I'll come back to you, Wessam. Abby, you are, like Hilton, like Radisson, you're relying on other people to build service departments for you. What are the challenges you're facing here as a forgive me, very small company compared to the global giants? You're relying on other people to build for you. What are the challenges you're facing?
I'm glad you said small. We don't hope to remain small for very much longer.
Amen.
So we've had a bunch of challenges, but the good thing is we came into this as investors. So we came in outside looking in, and we wanted to build an African brand, and we saw there were a lot of challenges out there. Very few African brands were surviving. Very few were getting funded. And we felt this was a market where we had to take more control. You have issues around supply where there's no current supply in place. So we now decided to get our own funding in place. So we've gotten our own funding. We've had a lot of challenges with the existing infrastructure, but the fact that we're working on a fund, we're getting the fund in place, is changing the whole dynamic.
And this is a fund. Investors are coming in to build or buy suites for you to manage. Is that correct?
So they come in, we're hoping that we can buy assets. We're hoping that we can take on long-term leases. The good thing about the apartment space is there's a lot of existing inventory, maybe not built to spec. So we're going to come in and ensure that there's very little supply risk. So we're going to buy existing assets for the most part.
Now, there's an interesting word you're using, control. And unless you have that investment, you don't get that control, right?
Yes. And for the most part, a lot of my colleagues here talked about management contracts. When you're dealing with smaller size inventories, smaller size contracts, a lot of the owners are not used to working with management contracts and respecting that. So if you have a bit of control in terms of the supply, in terms of ownership, you're sure of your supply for a much longer period.
Okay.
So that's why we're moving in that direction. Let's own some of the supply.
All right, so you're getting it done by raising your own funding, unlike Radisson, who is relying on other people to build. Now, funding, when we spoke earlier about this, you were saying about development costs. Development costs are rising. What's the issue here?
So, if you look at Africa, it's a very expensive place to build. I'm sure a lot of panelists have come here and talked about this already. But, again, from our own perspective, a lot of deals were not getting done because many of the operators or many of the owners, as much as development costs are high, that wasn't the main reason why many deals weren't closing. It was the financing wasn't in place. I mean, development costs in New York are expensive, but deals get done, projects get completed. But in Africa, because the major brands are not coming in with their own capital, they're depending on some owner to come fund the deal. And in many cases, the owner is depending on bank debt or maybe family funding, and over the course of the deal, it just doesn't get completed. So that's why it was very important for us to get the funding right.
Okay, Tolga, what's your perception of construction costs, development costs? You've been here a while, haven't you, now in Nigeria and working throughout West Africa. What's the trend in hotel development costs?
For Nigeria, I'm not going to say it's a little bit trivial. I'll give you some numbers, but it's a huge risk of customs, and there's so many contingencies. So it depends on what hotel, what brand, is it 5-star, 4-star, 3-star, 2-star, and what does it entail, and the area. Location is very important, again. I would say if it is, that has to be, it's very difficult in Nigeria to make a very feasible hotel for the investor side. That is why all the teams, like Andrew said, turnkey contractor is very important. Operator, consultants, and the contractor should get together and start working on the price. But to give you some prices, I think for a 4 to 5 star, where you have the pool and ballroom, conference hall, and restaurants, whatever necessary needed to be 4 to 5 star, you would want to look at the 250,000 US dollars per key. You shouldn't go 250,000 US dollars per key maximum.
For what?
For per key.
Yeah, including what?
Including basically a turnkey contract. Turnkey, yes.
Right, okay.
Including everything.
Okay.
Which, when we say turnkey, it includes the MEP,
Right.
it includes the OSNE, it includes FFNE, basically turnkey.
Okay. I think
It can go very high, obviously.
Yeah, okay.
I mean, it can go up to 350, 500,000 even.
All right.
Yes.
Okay, well, thanks for that Tolga. Now, Wessam, I haven't forgotten you, honestly. You, before you came to Hilton, you were working with Mangalis. You knew that, didn't you?
Yes.
And Mangalis started off life by building and owning land and hotel and managing those hotels. So you were an owner-operator. And that, therefore, gave you control, the word that Abby used now. You've now flipped to Hilton. I'd like you to talk to us about why Mangalis did that, why they were balance sheet heavy in terms of hotel ownership, and then the transition to more management contracts, and then talk to us about your transition to Hilton, where you're not an owner at all.
Very interesting question, and supporting the booklet which we have here. Indeed, I work for Mangalis Hotel Group, developing all 3 brands. The Talium Group, who's the owning company of the Mangalis Hotel Group, own as well the Radisson Hotel in Dakar. And after that experience, the positive experience, they decided to go into the hospitality and make sort of an investment for owning the hotel and managing by themselves. So basically, the target was 10 hotels. We made 13 hotels, 1,844 rooms, and they were all, in fact, constructed and also developed and managed by the same company. In fact, we were, as Mangalis Hotel Group, individual and working completely independent, but by the end of the day, we had processes as we have in the Hilton and all other big brands. We have processes, and we follow development and operational process for the owning company, Italium in Senegal.
All jolly expensive, but at least you were in control of your own destiny.
Yes, we were 100% in control of the assets. The company has 2 different SPVs, which is one the asset holding company, and the other one is the operating company. Yeah.
Okay, so owner-operator, and now you're working with Hilton. What's the difference?
Well, the difference is that Hilton has been moving from owning a company to an asset-light company. We work mostly on behalf of third party, on owners. I fully agree with my colleague Andrew that we are making sure in our processes right now that we go into a deep screening for any potential partner with us. We make sure that the owner has the right company assigned for as architects and also as a turnkey constructor. We make sure and we inquire about the availability of the cash, because I am absolutely convinced that the shorter is the construction time, the better it will be for the hotel, for the owners, and for the operators as well. So when we are facing and starting to negotiate a new deal, we go into all these details, and then once everything is clear, we sign the deal, and then we give for the owners a full support with our team. We have been investing a lot in Africa. We have a dedicated team which are in the market. They are based in Cape Town and in Sandton, and they give all the different disciplines and all the different departmental support to develop, and later on to project management and also into the management.
Right, but you're not quite as passive as some other groups, because big announcement last year, $50 million for Africa. What's that about? You building your own hotels with it?
We are indeed in some hub destinations in Africa. We are a little bit too late into the market for different reasons. We changed it completely now. We are investing in a lot of resources. We opened at the beginning of the year a new office in East Africa, so we are now represented in North, East, West, and South. We're opening, starting next year, another structure in West Africa as a head office. And Hilton has introduced a $50 million for the Hilton growth in Africa. This money is prepared mainly for conversion for the DoubleTree and Curio, because both of them, they are really sort of a king of conversion. We need the speed to market, and we study different cases just to see how can we get a hotel-operated hotel, a distressed hotel, or even like a not finished hotel, how we convert it to lift it up to our standards, to the minimum standards of the brand, and then we go into a management contract or eventually with a franchise agreement.
So you're not. So this fund, this $50 million, it's not for building your own hotels. It's money that you're using to help make it happen for other people.
Exactly. This is mainly as a key money. Once we run the figures.
What's key money?
The key money is like a sort of a cash injection to the owners, where he can or we can help them either setting up a new financial program to upgrade the product, or on the other hand, it could be also a part of any improvement program which we have foreseen just to lift up the standards of the hotel to the minimum requirement of the brand.
Is this then giving you an edge over other brands to get deals by putting this money in?
I think it is definitely a good advantage. To be honest with you, we are not using it a lot, because out of 10 or 15 opportunities where the owners are hunting this money, we end up not doing it because of different reasons. Mainly is like the fire life security or other challenges which make it impossible to rebrand that project to a real Hilton with all the standards which we need.
Thanks, Wessam. I mean, that's very interesting. It does show, I'm not saying that anybody else is not committed, but it does show that Hilton are saying we got $50 million on our balance sheet, and we're going to use that to get an edge. Abby, your reaction to what you're hearing from the big boys, what can you learn from what they're doing?
Make sure you do it all different. The truth is, they're big for a reason. They've been around for many, many years, and they've had certain advantages. So we really have to think differently. We have to do things very, very differently. And we've already begun that with our approach. We work with existing supply. It's not the best thing from a trust standpoint, reassuring the customer that you're going to have the same product in every location, but it gets us to market fastest. We're trying to make sure there's quality of service to reduce the friction with using different products and different specifications, so we do that. But I mean, I'm glad they're here, but we just have to do things different. We don't have the funding they have, we don't have the distribution they have, but I think the fact that we're controlling our destiny, so I don't have to go get permission from owners to come partner with me because I'm bringing my own money to the table. Because most owners will go for international brand first, but I'm saying I'm here, I have my money, and I'm going to go build. So it's going to be this African brand. And what we're finding is, in as much as the international brands have their global distribution, we also have a loyal client base in terms of the diaspora. So we're seeing some affinity there. So I think, just like the Mandarin Oriental has expanded out of Asia and gone into the West and built anchor locations, I think we can do that with an African brand as well. So we're currently in West Africa or Nigeria, but we have visions beyond this.
Okay. Tolga, same question. What are you learning from hearing the operators? Because you're building to their specifications, aren't you?
We do, yes.
Where do these guys fit in with when you're a contractor? Where do they fit in to make it happen?
In terms of the key money and extra money that they have and they can facilitate finance, it makes a big difference. I see that I must talk about Radisson because I know Andrew a lot. And he's really trying hard when even to facilitate finance and trying to make sure wherever he puts his hand, to tell the truth, finance is done. That I can tell for him. I'm getting to know more about Wasim, and I am sure he's also like that. But the key money will definitely make a distinctive competence for them to be in the market against the rest of the competitors.
Okay, thank you. I don't know how much time we've got.
I was thinking maybe if we could bring in some people from the audience, if you want to make a comment or any questions or contributes.
Yeah, any questions for our panelists, operators, contractor, and the Amara Suites operator and forthcoming investor?
You just round up, Trevor?
Well, I'm asking if there are any questions first. Anybody got any questions?
Can you turn this up, please?
Can you tell us who you are
Thank you.
when you ask the question?
Thank you. Hello, I'm Patrick. I'm from Chelsea. We run hotels. This question for Tolga. You mentioned if Andrew signs with a developer, he would the funding is done, the investment is done. What does that mean? What do you mean by that? You said if Andrew Radisson signs an agreement with an operator, with an owner, they have funding. What does that mean? I don't really understand that.
Thanks, Patrick. Thanks for raising the question. What I meant is, wherever they've been, Andrew facilitates the finance. If, in other words, I've seen in bigger projects that if there is 30%, 15% left to be financed from the side of the investor, he will facilitate it. That I've seen. Wherever he puts his hand, it was tied up at the end of the day.
Okay. So does this come from the Radisson Group or from
Patrick, what
investor?
It is
basically,
my own opinion.
If I close a deal, I'm going to get the hotel built. I'm going to find a way and a means to source funding. So if there's a debt requirement that's required, we work with a number of different debt providers. We would then go out and find the correct debt provider for the project. If there's a potential equity shortfall, we can potentially look at bringing equity shareholders in. We have a fund, Afrinaut, where we've already invested $50 million into Africa, which was provided initially as mezzanine debt funding. We converted it to an equity fund, primarily because mezz debt became too expensive in Africa. We were looking at a 15-16% interest rate on our mezz debt, which in 2007, 2008 was an attractive proposition. Now you can get debts at between 5 and 7%, depending on which lender you go to. So it's really making sure that when we sign something, we actually get it across the line, we actually get it open. So it's either bringing a minority equity partner in or bringing some form of debt in. We might not necessarily be investing ourselves, but it's using the network we've built up over the years to physically find a way to actually get the hotel open. So if I sign a deal with you, we committed to entering into a 20-year agreement with you. We're going to make sure that that hotel is actually open, and we're going to find a way together to do that.
Is this similar to what I'm sorry, I missed your name from the Hilton. Similar to what
No.
the Hilton has?
So Hilton, my understanding is that their $50 million is used for key money. So they're investing key money into a project with no initial return. If I'm providing money to you, it's either on a loan and I expect a return on my loan, or I'm an equity shareholder and I sit as an equity shareholder alongside you. So I'm not giving key money. It's an actual either a loan or an equity shareholding.
I'm pleased here to add something as well. I mean, by the end of the day, all the big companies are cooking with water and doing the same thing. Yes, the Hilton Growth Initiative for Africa is one thing what we do, but we do also exactly the same like Andrew is saying. We have some projects here in Africa where they were a little bit frozen, and in the last couple of years, they are advanced projects where they have the permits, they have signed contracts, and etc. But unfortunately, the financing has collapsed for the owners. So what we do now, since last year, we started as well to introduce equity partner. We invite some investors from the network to joint venture with the local partner and make sure that the funding for that project will go, because that is also a possibility to give us speed to market. These projects has been frozen since a couple of years, but they are in fact advanced. They have the permits, they have the land, they have the initial planning and the conceptual design of the hotel, and this is why we are focusing also as well to give us speed to the market.
I mean, that comment there, one of the slides I skipped over was that almost 20% of the pipeline, the volume I was showing it, were signed more than 5 years ago and just are not moving forward. Thank you. Patrick, I think maybe you've had I don't know if there's any other questions. We've got a question here. Patrick, I think you've asked 3 questions, sorry.
We have another question in the front.
Another question
Thank
here.
you,
Perhaps
Patrick.
you could take it offline. Okay, thank you.
Okay.
Hi, I'm Jeremy. I work on the interior design side of hotels. So we don't know each other, but we do a lot of Hilton and we do a lot of Radisson projects. So we sit between the operator and we are employed not by the operators, but we're employed by the developer. And we often find ourselves in a situation where you've got brand standards, and a lot of these brand standards are developed in America or in Europe, but we now got to bring those products into an African market, and sometimes those same levels or standards are 40% more expensive in possibly a market. Trevor, you'll obviously be able to have the real story in this, where you maybe not getting the same level of income on the hotel. So there's often a bit of a pushback from our developers on the standard, what the standards represent from a cost point of view. So just a question to both the hotel brands: what in your have you recognized this, and are you able to sort of customize your, let's call it, obviously not fire life and safety, but your standards to certain market situations?
Well, I think from a Radisson point of view, the only standards we not flexible that we won't budge on is fire life safety. Otherwise, everything else we have design guidelines, and that's exactly what they are. They're guidelines that we need to adapt to different markets that we actually are building hotels in. So we got to really have a look at. We have a design intent that we would like the hotel owner to develop to, and then we need to make sure that it actually makes financial sense. It's not worth are wild, forcing up development costs, that the day the hotel opens, I'm the only guy left in the room, all the professionals have left, and I'm here to drive that return on investment for the owner. So for us, it's more important that when there is value engineering happening, and it happens with every hotel project, that we're actually in the room and we can actually add value to that value engineering, because we know areas which we are a lot more flexible on, where we can give away we can waiver certain things, and there's other parts of our sort of design intent that we find very important, which is important to our guests and we want to hang on to. So we're more, I think, sort of commercially savvy than some of our competitors, to make sure that we still get a good hotel that represents the brand standard, but at a reasonable price that still can be developed in that local market.
All right, we have 2 more questions from over here.
Okay, I have a question for Hilton and Radisson. We have seen cases of the franchise model and the management agreement, the management type. So how do you make decisions on which one you could give a developer?
Well, from a Radisson point of view, we don't have 2 choices. We only have one. We only do management agreements. We don't franchise at all. We want to be the person in the hotel running the hotel if it's under our brand.
Okay, as for the Hilton Group...
Sorry, I have a question, follow-up question. Why not?
Why not? Because...
Sorry, my name is Ifoma from IFC.
Because we made a decision right now, if we take, if I take Africa as a whole, we don't think that there's hotel owners which are experienced enough to actually run the hotel to the same standard and to the same quality and as well as we can. So that's the reason why we've opted not to franchise. And we've actually seen that the banks, the lenders like yourselves, actually want to make sure that you actually have an expert in the hotel running the hotel for you. So the lenders are the ones who are saying you need to have a management agreement. We're on a franchise, I'm giving my brand to somebody else who might not have the same years of experience and won't be able to run the hotel as well as we can.
Wessam, get your word in.
I'm very happy for the attitude of the resident for the market and the franchise. We do franchise, we do management agreement as well. Hilton is franchisor number 1 in the States, and we do see a lot of opportunity coming up here in the continent. I fully agree with Andrew that we do not give any franchise agreement to unexperienced partners, but we do help them to get along. There is a lot of other potential, full potential partners who are experienced, then we can discuss with them about franchise agreements. But also there is a big trend on the market that white label companies are offering on behalf of the owner to manage hotel on their behalf under franchise agreement, and we do this as well in the continent. I truly believe, like today for Africa, we have about 90 properties ongoing, 43 trading, and the remaining one are in the pipeline. I think in the next 5 years we will be having like the count of 200, and maybe a good part of it is going to be in the franchise area. I get back to you as well on the other questions. We have in the company, we have 15 different brands, starting by luxury to full service to focus service, but also for lifestyles. We just introduced the new affordable living brand, which is the Moto. Some of the brands does have a lot of flexibility, which is mainly the DoubleTree, and we have also the guidelines as the others as well. And I totally agree with Andrew that in some cases there is a red line which is not flexible at all once it comes to engineering and fire life safety.
Okay, now we have time for just one more question. Thank you.
Thank you very much. Thank you, panel. Good afternoon, everybody. My name is Anne Renu. So we have 9,299 rooms in the pipeline in Nigeria. I'm speaking for Nigeria. With this number and with the existing, my first question is there really room in the market to accommodate these rooms that we're proposing?
No.
Thank you. Okay, so that's my first question.
They will not all happen.
Okay, so yes.
As I just said, of the total pipeline, 16% are very old deals. They should be open by now. They were signed between 2008, I think, and 2013. If you look at Lagos, which is a market we track incredibly carefully, looking at it day by day, the numbers, our figures say that only 12.5% of the pipeline in Lagos, which is about 5,000 rooms, 5,500 rooms, in my opinion, only 12.5% of them will definitely open.
Interesting.
And I'm not quite sure what definitely open means because I'm speculating about the future.
Yeah.
But, you know, my gut tells me I'll be able to buy a beer one day. Okay?
And the reason why...
So that puts those numbers in perspective. There's an awful lot of paper out there which will not happen. And in Abuja, it's even more acute. That I think Marriott have 6 hotels signed in Abuja. I forget the number of rooms. Not a single one is under construction. Okay.
Yeah, and just as a lead-on or an add-on to that, I mean, recognizing that this is going to be the case, at the extreme high end, so we can take a couple of boutique hotels, occupancy rate is probably up to 60, 70, 80. 90, in fact, I hear sometimes 100%. I mean, I've tracked 1 or 2. While those on the mid-range hotels are perhaps occupancy rate, if at best, 50, 60%. Are there any plans in place to actually step up or help the hotels to get to the right occupancy levels for their survival? So where I'm getting to is that we don't get to a situation where we flood the market with hotels and that are not likely to succeed, to be successful. I don't know what your thoughts are.
Sorry,
around that.
I didn't hear the question at the end.
Okay. How can we help how can we help hoteliers get to the right occupancy level to ensure they succeed in the markets that we're playing in now?
Well, in Lagos, which again is the market we track very carefully on where the data are available, occupancy levels, and I think the JLL slide show that, occupancy levels are well up on last year. We are coming out of a trough. 2016 was a revolting year. We were on our knees in terms of business because the demand just wasn't there. In most Nigerian markets and many West African markets, we are reliant on the health of the economy. There's not much a hotelier can do when the economy is in recession. You mentioned, though, that some of the smaller hotels, not even those just under the radar, but some of the small major hotels, they are doing, you know, that 80%, and yes, I heard 100% for a hotel in October, November, just yesterday. So there is demand out there. One of the things in Lagos, though, is we have some very, very big hotels, and their percentage occupancies tend to drag down the averages. So be careful about the average figures that you might have a look at.
And
October finished at about 75% Lagos-wide.
Okay, and finally, when will we have appropriate conference facilities?
When will you have a what?
Appropriate conference facilities. Echo Hotel seems to be where we all come to, but you'll agree with me the service here is not really where it should be for an international conference center. Thank you.
Get us thrown out.
Lots of plans. They're very, very expensive to build, convention centers.
All right, let's leave it there. Thank you, ladies and gentlemen. A round of applause, please, for our moderator, Trevor. Thank you so much. And to our panelists as well. Thank you, Andrew. Thank you, West Ham. Thank you, Tolga. And thank you very much, Abby.